Welcome to the Deep Dive. We sift through, well, all the noise out there to bring you insights that really matter. Okay, let's unpack this.
Yeah.
It feels like, artificial intelligence is just
Yeah.
everywhere, right? Headlines, conversations, the buzz is absolutely massive. And maybe you're wondering, like, how do I make sense of the investment side of things? Or am I missing the boat here?
Yeah, that's a feeling a lot of people share. It can be overwhelming for sure. So our mission today, cut through that noise, give you a clearer path. We're going to dive into some of the, let's call them foundational companies, the ones really at the heart of it all, benefiting directly from those hundreds of billions being poured into AI software, AI infrastructure right now. We're talking key players that, based on recent financials and market analysis, look poised for, well, sustained long-term growth, not just a flash in the pan.
And hundreds of billions. That's not hype. That's the real deal. Here's where it gets really interesting. This isn't just some tech trend. It feels like a massive fundamental shift. Like how tech works, how businesses invest. It's a total re-architecting.
Exactly. The scale is just, wow. AI stocks they've dominated S&P 500 growth recently. It shows you how big this is. And it's not just one or two companies. It's this relentless race. Tech giants invest in colossal sums, billions. What's fascinating here is we're looking at the bedrock, the companies enabling this race, not just the apps that might come later, but the essential infrastructure providers. You've got money flowing into the AI models themselves, the specialized hardware needed to train and run them. And then, up the stack to AI-powered services. Today, we're focused right on that foundation, the base of the pyramid, sort of.
Right. So why should you, listening right now, care about these specific companies we're about to dig into? Because they are the core infrastructure, the absolute nuts and bolts driving this whole AI boom. If you're thinking long-term investment in AI, and we mean years, maybe a decade plus, these are the key players, the enablers, the ones providing the picks and shovels, you could say, for this new gold rush. Understanding them is crucial. Okay, let's dive right in. First up, Nvidia. Almost feels like they are AI sometimes, doesn't it? A dominant force in AI chips, but dominant. What does that really look like?
It's genuinely unparalleled. Hard to find comparisons in modern tech, really. They're specialized GPUs, graphics processing units. They're the workhorse in like an estimated 70% to maybe even 95% of AI data centers globally. It's not just about making chips. It's providing the engine, the raw computational power needed for AI. Think of it like if AI is the new electricity, NVIDIA is building the power plants and the grid and that market share. It creates this incredible competitive moat, locks developers into their software platform, CUA.
And that position, well, it's led to some absolutely eye-watering numbers. Their share price, up over 1,100% in just 3 years.
Yeah.
Looking at that kind of explosion, what's driving this? How do they keep it going? Or, are there risks?
It's a mix, really. Relentless innovation plus just smart market capture. Their latest Q2 results, they show its sustained momentum, not some one-off spike. Data center sales jumped, wait for it, 56% to $41 billion.
Wow, 56%.
Yeah, shows the tech giants are still pouring money in. And it's profitable growth, too. Their non-GAAP earnings per share, that gives you a clearer picture of the core business, up 54% in Q2 to $1.05. And their gross margin is near 70%. That's exceptionally high for hardware. Just massive pricing power.
70% margin on hardware. That's incredible. Makes you wonder about the long game. Their CEO, Jensen Huang, he seems pretty bullish, right? Always talking big numbers. What's his take on where this market's headed? And I guess what could potentially knock him off course?
Oh, he's definitely got a bold vision. Predicts AI data center spending could hit $3 trillion to $4 trillion by the end of the decade.
Trillion, with a T.
Trillion, yeah. If that happens, it's just a massive, massive opportunity for NVIDIA. They're aiming to be like the operating system for the AI economy.
Yeah.
But yeah, there are potential headwinds. You've got the big cloud players, Google, Amazon, Microsoft. They're all trying to develop their own custom AI chips.
Right, to rely less on NVIDIA.
Exactly, reduce that dependence.
Yeah.
But NVIDIA's ecosystem, their lead, it's huge. It would take years, maybe decades, to truly replicate what they have. Just for context, their market cap is now around $4.2 trillion, and that gross margin, 69.85%. Pretty healthy.
4.2 trillion. Yeah. Staggering. Okay, let's shift gears a bit. From pure hardware to the cloud, which is, essential for actually using AI. Next up, Microsoft. They got into AI pretty early, didn't they? Made some smart moves.
They really did. Their early partnership with OpenAI, that was key. It let them weave those AI chatbots like ChatGPT Tech right into Bing, into their Office suite, gave them a real edge, user-facing over rivals. Even Apple is still kind of playing catch-up there.
That integration is slick, definitely. But thinking longer term, like the next decade, Where is Microsoft's biggest advantage in AI? Is it mostly Azure, their cloud platform?
Primarily Azure, yeah, absolutely. The OpenAI stuff is great for visibility, for getting users hooked, but Azure is the engine room. Microsoft's the second biggest cloud player globally, got about 20% of the market, their strength, deep roots in enterprise. Businesses already use their stuff, trust them. Makes it easier to adopt Azure for AI, and the growth is there. Azure and other cloud sales, up 39% in their last quarter, ending June 30th. Looking ahead, fiscal 2025 Azure sales projected around $75 billion. That's a 34% jump.
$75 billion just from Azure.
And connect that to the bigger picture, global AI cloud revenue. Some project, it could be a $2 trillion market by 2030.
$2 trillion, wow.
Yeah. So Microsoft's role here is just critical, providing that backbone for businesses to actually do AI, delivering it as a service, integrated, huge enabler.
Okay, next up. A company you might not hear about quite as much, but maybe you should. Taiwan Semiconductor Manufacturing, TSMC. They're kind of the hidden giant in all this, right? But incredibly crucial.
You nailed it. Unseen giant is perfect. Their role is profoundly critical. TSMC makes the most advanced AI processors for pretty much everyone. They hold like an estimated 90% of that advanced processor market. So if you want the cutting-edge AI chips, you go to TSMC. Which raises a big question, right? What does it mean for one company to be so central, so indispensable?
It means pretty much every big tech name you know. Apple, Nvidia, loads of others relies on them. Without TSMC, this AI revolution just wouldn't be happening this fast. Maybe not at all, given how complex these chips are to make. They're a bottleneck, maybe, but also have immense strategic importance.
Exactly. And their financials show it. Q2 sales jumped 39% to $31 billion. Earnings up 67% to 2.47 per ADR. That's how their shares trade in the U.S.
Strong numbers.
Very strong. Shows that foundational importance, that demand for what only they can really do at scale. Their near monopoly means if you invest in AI, you're kind of implicitly investing in TSMC's tech. They're unavoidable. Critical supply chain piece.
What's also interesting with TSMC, though, is the valuation. Their stock is up nearly 200% in 3 years, sure, but it trades at just 26 times earnings. That's like roughly the S&P 500 average, and way below a competitor like Intel, which is at like 88 times earnings, it seems. Low.
Yeah, that's a really important point for investors to consider. It suggests the market sees their importance, but maybe it's underestimating the future AI growth. Or perhaps there's a discount because of, the geopolitical situation, their location in Taiwan.
Right, that risk factor.
Could be. But for patient, long-term investors, it might signal a more attractive entry point compared to some more hyped AI stocks. Solid profitability, critical role. That relatively modest PE could be interesting. Their market cap, for context, is $1.3 trillion, and gross margin sits at 57.27%. Still very healthy.
Okay, moving on. Let's talk Broadcom. Another big player, but focusing more on ASICs, application-specific integrated circuits. Not quite the general-purpose chips like Nvidia's.
Exactly. Broadcom has carved out this very specialized, very lucrative niche. Their ASICs are custom-designed chips, used heavily in AI data center infrastructure. Think companies like Alphabet, Meta. They go to Broadcom for these tailored chips. What's cool here is that specialization. They're not just generic. They're built for specific AI tasks. More performance, more efficiency for certain things, critical for the big cloud guys.
And that demand for custom silicon, it's really showing up in their numbers, right? Q3 results looks pretty strong.
Very strong, really telling. Their AI revenues surged 63% in Q3. Reach $5.2 billion.
63% jump.
Yeah. And management thinks it's going to accelerate even more, over $6 billion in Q4. Non-GAAP earnings per share also jumped 36% to $1.69. So strong demand now, and they're confident it's speeding up. That custom focus is paying off.
And wasn't there some big news recently? A huge new customer order that got people talking?
Yes, that was a big one. Real validation of their strategy. Broadcom revealed a new customer. Everyone pretty much thinks it's OpenAI, placed a massive order. $10 billion for custom processors.
$10 billion from one customer.
Yep. That's not just a big order, it's a huge vote of confidence. Shows Broadcom can deliver the really high-performance, bespoke stuff that cutting-edge AI needs. A testament to their engineering.
So what does a deal like that mean for their future? Their position in the AI race?
Well, before this, Broadcom was projecting AI revenue growth up to maybe 60% in 2026. But now, CEO Hock Tan said 2026 AI revenue could improve significantly. Didn't give a number, but called it a fairly material improvement.
Okay, so bumping up expectations.
Exactly, a strong signal. It suggests that as AI gets more complex, more specialized, the need for custom chips like theirs will just grow. Plays right into their strengths. So let's connect the dots here. You can see how these companies fit together, right? Different layers, but all crucial. Nvidia's got the core processing, the GPUs. TSMC actually makes those advanced chips. Microsoft provides the cloud infrastructure to run it all. And Broadcom does the specialized custom hardware for optimization.
Yeah, you see the whole ecosystem.
They're all foundational, indispensable pieces of this AI revolution.
It's a really helpful way to see the structure behind the headlines. And, the sources we look at for this, they all kept stressing one thing: patience. If you really want to understand or benefit from this AI boom, you need a long-term view. Think a decade, maybe more. It's not a quick flip. It's a marathon, really changing things. So just to recap quickly, we dove into Nvidia, the AI chip king; Microsoft, pushing cloud AI and integration; TSMC, the essential manufacturer behind the scenes; and Broadcom, specializing in custom silicon. Each one plays a unique, vital part. Hopefully this gives you a clearer picture of the real forces driving this massive shift. They're like the architects of this new AI infrastructure.
Absolutely. And maybe this leaves you, our listener, with a question to think about. Beyond just these companies building the tech foundations we talked about, what else gets transformed? With maybe $3 to $4 trillion projected for AI infrastructure spending, what totally new industries or services might pop up, or which existing ones get completely reshaped? Think about the ripple effects, the new business models, maybe even the societal changes that this huge investment could unlock, things we probably can't even fully imagine yet.